Hey guys, what's up? Alec back with the daily stock. Wait, hold on. Hey guys, what's up? Alec back with the daily stock market. And look at that, another fairly green day today with Upwork leading the pack up 7.5%. And you can see what other stocks are shortly behind that. We also have Coinbase down the most, around 10%, 9% on the day downward movement. We're going to do a quick stock market update here. We're also going to go rapid fire. So we're going to try to talk about a few different stocks. But the first stock we're going to deep dive into, it's going to be FedEx. So without any further ado, let's jump right in the video. Just smash the like button, share this video with a friend if you think that they will find it helpful, and subscribe with post notifications on. So the reason why we're talking about FedEx is because they have earnings that are available tomorrow. They have high expectations for their earnings. The last 4 quarters, the EPS has been anywhere between $4 and $5, and they've actually beat or met expectations 3 out of the 4 times in the past. This quarter, we have expectations higher than ever, around $7 for the EPS. So let's talk about FedEx. They're definitely an important stock because they're a world leader in shipping and freight services. So first up, we have the dividend yield 1.3%, pretty attractive. PE ratio 12, which is implying that it's a really good deal at the price that it's at. Market cap 59 billion, 52-week high. We have closer to $300 per share. So you can see they are significantly off of recent highs, down around 25%. Now, during the pandemic, we've seen them as low as $120 per share and $150 per share. So the question is, will they go below $200 per share again? In my opinion, I think they will. I'm being patient. I'm playing more defensively on FedEx and waiting for that $195 price target. And I think anywhere between $150 to under $200 is a good place to dollar cost average in to FedEx. Remember, 5 years ago in 2017, FedEx was anywhere from $210 to $205 per share. Something else to note, if you get in under $200 per share, the risk versus reward ratio is going to be skewed more toward the reward side. As you can see, lots of stocks are down 70%, 80% from highs. FedEx is only down 25%, which is a good thing, showing that it's a more stable stock than some of these other growth stocks. Solid shipping demand could give a FedEx a bigger boost. So what's next for FedEx? The company has been a beneficiary of the boom in online shopping demand during the pandemic. Will report its latest quarterly results after the closing bell on Thursday. Analysts expect a 37% jump in earnings and more than 8% increase in sales for the quarter. For the full year, Wall Street is predicting a 13% gain in profits, an 11% leap in revenues, and they're down from highs of last year. Rival UPS, by the way, of a comparison, is forecasted to post earnings and sales increase of just 5% jump from a year ago. Okay, FedEx will also host an Analyst Day presentation and another gathering for investors next week. Feel free to pause it and read the rest of this full article. But the last paragraph, you'll see that many peers are bullish about FedEx as well. 24 of 31 analysts that follow the company have a buy recommendation on it. According to some other analyst website, the remaining 7 rate FedEx a hold, and the consensus price target for FedEx shares is just north of $287 per share in the next 12 months, which would be a 25% gain from its current price. And let's do a quick update on Tesla. Back to $700 per share, was highest $738 per share earlier this morning. And we had around a 16% rally from lows of $629 per share. So it looks like there is a pretty good support right under $630 per share and even under $650 per share. I think is a great place to dollar cost average into Tesla. We see them currently at a 52-week low, which I predicted several times on the channel. I think we can even see them closer to the $500 share mark. So again, I'm being patient for long-term buys on Tesla, but I'm continuing to dollar cost average in the 600s and under $630 per share. Amazon at $108 per share. And if we pull out to that 3-month chart, we can see there's a lot of support, just like Tesla, that happened just in the last couple months. So we see $105 per share, $102 per share. If we see Amazon under $100 per share, I think that'll be a good time frame to start buying a little bit heavier. I want my average cost on Amazon to be closer to $80 or $90 per share. So that might involve a little bit of patience, but I think Amazon is a great one to hold for long term. And if you get in under $100 per share, and well, I should say if I get in under $100 per share and I'm able to sell closer to $160, $180 per share, I think that's very possible in the next 12 to 24 months, which could be around a 60 to 80% gain on Amazon stock in the next 12 to 24 months. Now, another quick update is going to be on Netflix stock, 4% up on the day, okay? And we see them down 51% in the last 3 months, and we see a pretty strong support right around $165 per share to $170 per share. I think in the 170, anything below 180 is a great place to dollar cost average. You're basically getting in at a 5-year low if you get in closer to 165. And I think there is a strong possibility that we can see Netflix closer to 150, $145 per share. So I'm not loading the boat on Netflix yet, but I'm definitely dollar cost averaging for long term for like a 2-year to 3-year hold on Netflix on anything under $200 per share. I think there's a strong possibility that it could be sold at $250 to $300 per share in the next 12 to 24 months, which would give you around a 20% or more growth on the stock price from current prices. Another quick update is going to be on Shopify stock. A lot of people are interested in them, and I think they're at a pretty good price for a long term. We're seeing that support right around $315 per share, but we've seen it as low as $303 per share. So under $300 per share, if we can see that on Shopify, that's when I'm going to be probably buying a little bit heavier. There's definitely possibilities that we could see Shopify closer to $200 per share, but that's why I'm continuing to dollar cost average in most of these stocks that I'm talking about and not buying just huge lump sums or thousands of dollars at once. I like to dollar cost average myself in right now because nobody knows how much lower stocks can go, but I am extremely confident that in the long term, over the next 2, 3, 4, 5 years, that a lot of these stocks that I'm talking about could have huge growth expectations and could even be at new all-time highs. So if we see Shopify at new all-time highs, even if it takes 2 to 3 years, that could be over a 5x return on your money. 500% gain in 5 years is okay with me. That averages out to about 100% per year. That's definitely possible for something like Shopify, but it probably won't move that consistently up. What we'll probably see is like, 100%, 200% gain in the span of a few months, and then a huge sell-off, and then another huge gain, a huge sell-off, and people might get discouraged along the way. And there might be a few curveballs along the way, so try to watch out for those as best as possible. And the last stock we'll talk about is Meta. Meta Platforms, aka Facebook stock, is down 20% in the past month, 26% in the last 3 months. It's showing no signs of a bottom right now, so you guys know what I like to do with that. I like to dollar cost average in consistently. This is a stock that I definitely want to be a part of for long term. It's one of my top 10 favorite stocks in the entire stock market. So therefore, I want to have my portfolio diversity closer to 5% or even 7% on something like Meta Platforms, aka we're going pretty heavy into Meta Platforms for long-term investing. Now, if we go under 150, we have a 5-year low of around 125, 130. That's when I'm going to start buying a little bit heavier. Right now, I'm just dollar cost averaging in like $20 a day into Facebook. But if we see them go under 130, closer to 125, I'll probably buy around 10 shares at that price for long-term investing. And I plan to hold for a long time, 5 years or more. I think Meta will be around for a long time. They're not just Facebook. They also have Instagram, which everyone uses, either Facebook or Instagram. They also own WhatsApp and Oculus. So whenever you're buying shares of Meta platforms, you get access and you are an investor in all of those different companies, which I'm fond of all their business models from WhatsApp, Oculus, Instagram, Facebook, and much more. And if you think of all those different businesses, also, they have huge amounts of daily active users. They're growing their daily active users. Once the metaverse becomes a bigger thing, Oculuses will be selling more. Even though it's looking dim for the company right now, I think they do have a bright future ahead of them. So smash a big thumbs up on this video, subscribe with post notifications on, and share with a friend if you found value in this video. Thank you guys for all the love and support. And if you need a cryptocurrency update, go ahead and follow me on the Daily Cryptocurrency on Instagram. I also just posted a new full-length YouTube video that's over 10 minutes long, going over 3 different altcoins with 10x potential. We also did updates on Ethereum and Bitcoin. So subscribe there for consistent cryptocurrency updates. Don't forget to buy low and sell high. I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.